Okay, everybody, this is Brandon from Galaxydoc Market. Today is not September, it's October 5th, 2024. It's Saturday, about 9:40 p.m. as I bring you this part one. There's two parts to this, super long. I have a lot to say. I want to focus on the bond yields and how it's giving us a warning and how this hasn't happened since the 2008. And I'll tell you what we're talking about. And then I'll go into a little bit of not a little bit, but a lot of deep dive into what the market makers or the powers that be are telling you through the news cycles. Here's the disclaimer. Pause it and read it. If you agree, please move forward. And of course, I would appreciate you giving me a thumbs up, sharing it, and subscribing. All right, we're also on x.com, Galaxydoc Market. Follow us there. There are live commentaries and news and things like that that I can't post on a regular basis on YouTube. All right, so what we have is a situation where we talked about last week about selling on Rosh Hashanah, market crash watch, okay? And so Rosh Hashanah started on October 2nd. It extends through 14th where Yom Kippur begins. So there's an old saying that says sell on Rosh Hashanah and buy on Yom Kippur. And in part two, I'm going to be talking to you about what is that buying on Yom Kippur going to entail and kind of what the market direction is going to be. So what are these signs? What are the signs that I think market crash needs to be monitored, that it's headed our way? I'm not saying it could crash today, tomorrow, or whatever the case is. It's going to come like the thief in the night, if I want to get so biblical. But we have to talk about this. What are the signs? And I have a whole slew of them. Obviously, the signs that we're talking about are, and I mentioned this back in October 4th, okay, that's on Friday. I said since the FOMC cut rates 50 basis point in the name of making loans more affordable, taming inflation at market highs, and we have a slew of videos, me talking about the fallacy of that action. Since the cut from down here, we finished the day at 39.46 or 45. Okay, guys, when we cut rates, it's supposed to go down. Okay, technically, that's the whole idea. And this shows you how distorted the market is, how broken the market is due to unrelenting money printing. But more importantly, I want to tell you that I don't think it's Fed's mandate to really curb inflation, keep inflation in check, and for maximum employment. Whatever employment numbers that came out on Friday on October 4th, just throw that out the window. A lot of that has come at the backbone of increasing government jobs. Go figure. So the bureaucracy, that is the government. And if you want to see the efficiency of that, just go on x.com or just look at the news, those that are willing to cover it. What's going on in North Carolina? I'm just going to tell you that. Okay. Shame on you, FEMA. All right. So, the second thing is, and I'm talking about the same thing, is that Fed's not interested in their mandate of low inflation. I tweeted this back in October 4th. That was last Friday. And their job is to destroy the middle class, enrich the corporations, and the 0.5% elites, not even 1% elites, right? This is not going to end well, and they are planning for it. It just seems like that they are doing it in our faces, and that's the way it's going to be. Okay? Is the recession, that is the one that they're worried about, and we'll do anything to create an illusion of the stability in the marketplace. But if you haven't noticed what Warren Buffett's been doing, and whatever Jensen Huang from Nvidia, which we're going to cover, what he's been doing, okay, what pretty much all the CEOs are doing right now, they're selling to you, those that are thinking that the market is going to be hyper bullish, okay? And but brewing underneath this, okay, let the bond yields tell you what's going on, and that's the topic of this video. All right, so, and then I mentioned about the non-farm payrolls, and this is what I'm talking about. 254,000 jobs versus they beat the estimate, 147K. Guys, these numbers are all made up. It's basically they're going to revise it down just to create the illusion that the current administration hasn't lost control of the economy. But those of you that are living in the real world, you can see it in the food and gas prices. People are losing their jobs. Nobody really has full-time jobs anymore. And then, of course, meanwhile on this pump, right? We had a little bit of a pump on Friday, but could not break out into that upper range that we've been talking about. The 10-year Treasury yield is skyrocketing at the same time as the market is going higher, all right? This is the divergence that we're looking for. Hard to believe at these jobs numbers, right? And I said, hey, look, guys, TNX is skyrocketing. We just cut 50 basis points. China is hyper-stimulating their economy. What are they afraid of? Okay, if you want to see more about that, I just posted a video, I think on Wednesday maybe. You want to see all of it in a series. I've been talking about this ad nauseum over the last 2 to 3 months, okay? And it's coming. Chickens are going to come home to roost. Now, Coastal Journal, you guys should check these guys out, okay? I really like them. I'm not being paid to say it, but I think they put out some good, insightful analysis, partly because it aligns with my own view also. But there's yield curve inversion coming from the long and the short end of the yield. Okay, what is that telling you? When that inverts again, it's been inverted for a while, but it flattened out for a little bit, and now it's inverted again. That is signaling recession, folks. I've been saying hashtag recession constantly. There is not going to be a soft landing to this. Mind you, though, I think that there will be a rip-your-face-off rally after the elections. We'll talk more about that as is necessary. But the topic is right now, you got to be prepared for the black swan event that is swirling out there. I don't know if it's the war. I don't know if it's the FEMA debacle that's happening in North Carolina. Prayers for those people that are suffering at the hands of our own inept government. And then, of course, the global monetary policies and our Fed's buffoonery. But I don't think they're buffoons. I think the Fed is doing this on purpose. Their job is to hyperinflate out of the trillions and trillions of dollars that they print out of thin air every single day. And at a certain point, you push the engine too far, it's going to blow up. And that's what's happening. And they're going to blame it on certain events. And of course, everybody thought the dock workers strike was going to be the one. Oh my, that ended pretty quickly. Ask Mr. Cartier why that ended so quickly. And then on top of all that, I mean, literally these dock workers are not really starving, right? I mean, they're making on the average 150K. This is just so obtuse in the way that they're being viewed, okay? A lot of people think dock workers make minimum wage. They do not. Okay, this is what unionization does in a hyperinflationary environment, okay? And they're going to hold us hostage. That didn't last too well, all right? Now, this is a tweet that I posted because I couldn't have said it better myself, but this pretty much illustrates everything that I'm talking about since the rate cut. The 50 basis point rate cut was big, and they're talking about more rate cuts. And yet, as a result, I mean, we have 30-year Treasury at 4.2650, but our 1-month Treasury, which should be yielding the least, is yielding even more. This is where the inversion comes in. My favorite indicator, which is measured by TNX, is at 3.9770, almost at 4%. This Treasury yield at TNX, or Treasury yield above 3.8, is highly, highly critical for the markets, okay? Something's going to blow up, folks. Look at this, okay? The whole idea of cutting rates was to decrease this cost of borrowing. But you know what's really happening in the background as a result of these yields rising, okay? And while the central banks are printing money and propping up these banks, the banks are holding non-performing, basically toxic asset, which is the U.S. Treasuries, okay? As a result of cutting rates, so it's thought the yield would go down, and then they wouldn't have to mark to market these losses that they're carrying that's unmarked to market. If they mark to market, every single one of the banks, including JP Morgan Chase, would be out of business. Okay, yet this is going up. By the way, and I'm going to show you this one for you to digest, is that, the Federal Reserve Repo Facility, okay, oh my gosh, I'm having flashbacks of 2008 and 2007, the ghost of financial crisis coming back. So the Fed Repo Facility is for emergency lending for banks that are insolvent. That'll help them get through to the next day. It's an interbank lending, okay? Somebody tapped it for over $2.6 billion, okay? I wonder who that candidate might be, okay? This is the largest amount since June of 2020. It's not critically large to a point where they're tapping it to the hundreds of billions of dollars during the financial crisis, but it's still up there. There's a bank out there that's in trouble, okay? And these guys like me, I think they think it's Bank of America. I think also Deutsche Bank, Comerica, Bank of Oklahoma. Okay, I mean, whole slew of these banks are in trouble. Wells Fargo. Why do we not hear about Wells Fargo so much lately? Okay, but keep an eye on that. Okay, so here's another thing. I posted this on that last week's video, and I said Warren Buffett's cash stock is piling up higher. And of course, on August 21st, right? Okay, he filed and sold more B of A stocks. He's been selling this like it's going out of style, right? Okay, is that did he know something? Because, a lot of these guys trade on insider information. Let's just say it for what it is. Okay, you can call me a conspiracy theorist or whatever the case is. I'm just saying, Nancy Pelosi is the greatest stock trader of the 21st century. Not bad for a pinup girl, right? That's how she started. Okay. Of course, here's the one. I talked about this. Mortgage rates are spiking. Okay. After stronger than expected jobs report. You see, the government is, the current administration and Fed is damned if they do and damned if they don't, right? They have to show that the jobs are increasing to show the dummies out there, the normies out there, to that basically that economy is fine. We're not going into recession. We're going to have a soft landing. But the net effect is that, who can afford the mortgage rates right now? Okay, at the current prices. Okay, they're trying to hyperinflate assets, and basically the affordability. Who can afford homes right now? People could barely afford to eat right now, right? So is this the part of the grand plan? That's the question. All right. So this is from Kobesi Letter. I hope I said that right. And this goes in line with the whole tech space, and I've been harping on this, right? Nvidia, Jensen Huang, their CEO right here, recently sold over $1.849 billion of its stock right now. In fact, Jensen Huang's basically stocks are worth more than the entire value of Intel Corporation. Okay. And yet, I think underneath it all of these semiconductor companies and AI companies are engaged in the same type of accounting practices where they have all these shadow companies that they're laundering money back and forth. And I think, like I said, markets ring the bell at the top. And I think also you've heard about SMCI, Supermicro, but you also need to be paying attention to Nvidia. And I'll do a little deeper dive on Nvidia technical analysis in part 2. Okay. All right. And then, of course, the war rhetoric continues, right? Trump is urging Israel to take out Iran's nuclear facilities, blah, blah, blah. But, again, whether you believe it or not, I think presidents are selected, even Trump at this point. A lot of you are out there thinking that he's like the anointed one. But I think he does the bidding of all of the deep state or whatever you want to call them. Okay. And but Israel, by their policy, if you hit them hard, they're going to hit you back 10 times as hard. And now countries are choosing sides at this point. Okay, what do I mean by that? Okay, well, Iran's closing their airspace until October 9th. Okay, right here until October 9th. And then basically, the other thing that's happening is that if you're biblically oriented, things don't happen by accident anymore, I believe. There was a 4.6 magnitude earthquake. Okay, take with it what you will. Okay, and those of you research more, see what it says. Okay, war drum beat louder and louder. Is this a divine warning? Okay, so I want to go over real quick gold and silver. Okay, Solemn Rosh Hashanah market crash watch. Gold and silver has been spiking. If you've been living under a rock, you know that gold and silver is on a parabolic type of a run, and it's not over yet. Everyone thinks we're going to pull back, and what it's doing is it's just chopping sideways to build energy to move higher. And I think gold and silver is warning you, along with the TNX, which is the 10-year Treasury yield, and all the bond yields going up right now despite cutting interest rates by the Fed. And I think this is by design. Is that there is a black swan event or some events that are coming Okay, gold is always a early warning system for the markets. And for those of you that don't think that's going to happen, I got news for you. Gold is at all-time high, and silver is at $32. It's not at all-time high. Silver's all-time high, I think, was at $58 to $62. Okay, so silver has some catching up to do. Okay, so let's talk about gold. Okay, this is the daily on gold. All right. And so gold is pretty much making, for those of you that really want to know, it's basically gone parabolic, and all it's doing is making a bullish flag formation, folks. Yes, can it go down and tag this 20 SMA? Of course they can. But everything is making lower highs. There's momentum, okay? It's pulling back. It's probably going to find support and start moving higher and breaking out higher. Okay, it's working in an orderly fashion. Every single time these gold, before they broke out of their bases, have gone sideways, made a bull flag, and they're moving higher. Every single time, bull flag, moving higher, bull flag, moving higher. Get the gist? Okay, so yes, but people are saying, well, yeah, but daily MACD. Okay, how long is that going to last? We've been pulling back. We've been moving sideways to build energy. So yes, there is a bearish formation, and yes, we could pull back all the way down to the 2630. It's going to be brief, but gold right now trading at all-time highs, never traded at these levels, and I'm here to tell you that based on these technicals that we are moving much, much higher. And why? Because I use my phase 4 parabolic impulse wave theory, and basically we have gone to 1, 2, 3, and we're on the phase 4 right here. And we've gone through the first overhead resistance again, and then we got through the second overhead resistance. We're pulling back to build energy, could come right back into the 80 MA, pull all the way back down to 2600-ish, and then move higher. Okay, or maybe not. Maybe one day, one night, you're gonna wake up and this thing is at 2850 plus. And I'll tell you, I'm looking for that price in the next 2 to 3 weeks. And you can take that to the bank. The world is broken right now. And if you notice all of the events that are happening, whether it's the hurricane, whether it's the dock workers strike, to the Israel and Iran conflict, who's been silent is China. But why is China dumping so much liquidity into their system? They are worried about something. There's a bank or banks or something out there that's going to implode. I have no idea what that is, and we'll figure it out when it is. But gold and the 10-year Treasury and other Treasury bonds are telling you something. Okay, we're gonna pull back possibly or chop sideways for maybe a week or so, and then move higher. Okay, I don't know the exact time and date. Hell, it could happen tonight. Not tonight, but on Sunday night, Monday night. Okay, but you got to be prepared for this. Okay, so gold and silver, I'm very bullish on. Any of these pullbacks, you need to build positions or go buy physical gold. Not financial advice, but that's pretty much what we're thinking of doing, right? What we're going to do, all right? Now, let's look at our 10-year Treasury yield, okay? All right, guys, this is not normal, okay? It's got a big stiffy going right up, okay? It's going parabolic, okay? So that's what I'm talking about. The 50 basis point cut, okay? It's not doing anything. Anything above, I've been telling everybody, anything above this 38 level from here where it broke out right here, okay, it's bearish for the stock market. The 10-year Treasury yield means that there is something broken out there, folks, okay? And the fact that we've now been getting almost parabolic, it means that we can just gap up higher and higher every single day. It means that the full faith and trust in the U.S. government debt is going to zero. Not zero, but it's being lost. I'm sorry, I misspoke. Not zero, but the full faith and confidence in U.S. Reserve currency status. I've been saying that for a couple of years, right? It's gone. Okay, so what do we do? Okay, well, we need to look at the signs. And for me, I think SMCI rang the bell. I did this video. This was last week. I said, hey, we're down here. And guess what it's done this week, right? It's made what? What does this look like to you? Okay. This is a weekly chart. This sure looks like a bullish flag to me, right? Building energy to go down more. Okay. SMCI's accounting gimmickry and DOJ investigation is very akin to any stocks during before a major market collapse like Enron, like Countrywide, like Bear Stearns, Lehman Brothers, long-term capital. I don't care. If you've been around long enough, you know that there is always a company that is going to ring the bell at the top, and I think SMCI is the one. And then the cohorts will follow because there's always more cockroaches out there. All right. So I'm talking about 10-year Treasury yield. This was last week. We're at 37.28. We're at 39.81. That's where we finished. This is where we were. This is what this is right here, right down here. Okay, guys, we've gone straight up. Again, we're basically building energy. Move sideways a little bit. Now we're moving higher. This is 1 hour chart, folks. Okay, you got to pay attention to these. Okay, we are headed into recession. Hashtag recession. I don't give a crap what Fed says. Okay, Jerome Powell. Okay, the liar in the Federal Reserve Bank. Right. You know, there's nothing federal about the Federal Reserve Bank. Right. It's a private bank. Right. Yet they have the power to print money and issue monetary policies. Go figure about that. Okay. So here's the summary. Listen to what they do, not what they say. Okay, they're saying everything is fine. The job market is fine. We're not in a recession. They expect soft landing. Yeah, well, you know what? Bernanke also said in 2007 that the effects of subprime is largely contained to regional banks and that it will not spread. And what happened 6 months later, you see, well, a year later, we see Bear Stearns and Lehman Brothers, one of the oldest, most venerated banks out there, collapse. Okay? Been around. I've seen it all. There's coordinated efforts to bring the world to world war is in full force, and you can kind of see that now, right? I mean, you have the politicians, all walks of life right now. Okay, none of them are speaking out against Ukraine, Russia, Israel, Iran, China, Taiwan. What else is next? Okay, Fed's not interested in taming the inflation, folks. Okay, they are interested in hyperinflating their debt, thereby creating inflation to rob you of your prosperity. Bond markets are calling BS on the recent 50 basis point cut. Bond market is telling you that there is crash coming. You ignore it at your will, even if it goes up a little bit in the next few days or a week. Okay. SMCI continues to warn the market of impending sell-off. And of course, sell on Rosh Hashanah and buy on Yom Kippur. Bond yields are warning you from last week. I said gold is warning you, currently at 26.47. Guys, I said it's likely to hit 2,700 by midweek or higher, right? We hit 27.08. Okay. Okay, so gold is moving higher, folks. Probably in the next 2 weeks. Okay. History rhymes. Let it play out. And then also go back to my previous video and watch my video on the Fed pivots and the cutting cycle and how that relates to a massive market crashes and recessions. Okay. And we're right there. They cut rates, guys, at all-time highs in the market. Think about that, okay, before you believe anything that other people tell you. Watch the developments of Israel-Iranian war, okay? Remember, this is election cycle. We're choosing a president. I don't think it's chosen. I'm sorry. I'm very cynical. I don't believe that presidents are chosen. They're selected, okay? So major countries are now choosing sides on this war, which is the World War III narrative in full force, okay? So, you know, pray for peace, folks. Gold and silver are coiled springs still, okay? I think they're going much, much higher, and it's now being confirmed by TNX. TNX is telling you there is some sort of a collapse headed our way, okay? So in part 2, stay tuned. I'm going to go over some SPY, VIX, and, you know, several other stocks that we think are worth mentioning, that we're following or have positions on, okay? All right, so that's kind of it. Otherwise, I would have been talking for over an hour. Follow me at Galaxydoc Market. Like us, share us, and above all, comment. And, of course, subscribe, please. Okay, if you want to learn more about working with me, okay, go visit my website in the description or email me even better. Like I said, I have a internet special, social media special, where, you know, you don't get the full aspect of it, but you still get my daily market commentaries, pivots, and my weekly watch list. Okay, if you think that should be helpful and try me out, email me and find out. Okay, all right. Anyways, I'll see you at part 2.